Welcome back to the Precision Trader. Just wanted to do another overview of today's order book. Sorry for the scratchy throat here, but have to bear with that. With that said, we were on AFRM today. I didn't plan on this being our primary. Usually we get a variation between about three different stocks we'll trade through the day, but today ended up being AFRM. Three hits on an AFRM. So with that said, we always like to get an overview. We'll call this the POS, the precision order book strategy. So we know one part of that is knowing what it looks like in the pre-market. If you're going to use the pre-market, now do you have to have the pre-market and what it looked like and all that to be able to trade? No, not at all. It's just, if there's something that you're interested in trading for the day, it's nothing wrong with looking at it in the pre-market to get an insight on where it could possibly go, where your bias would be. Now, as you can see here, for anyone that hasn't watched previous videos on the education, please do. But just a quick summary here. These heavy bands of orange and red signify large orders sitting in the order book looking to be filled, buyers and sellers. Now, we can see here is we have about a pretty similar balance between buyers below and sellers above. So where does our bias? 50-50 at the open. I actually had one of the guys in the server ask about buying the dip at 160 just before the open. And yeah, for me, it was a no-go because it was just a 50-50. And I told him that I would start looking at buying the dip at 150. So let's see what happens at the open. Again, we're on 1 minute candles. Let's move on down here to the $1 increments. So we see at the open, we get a push up and a quick rejection. Sellers came in hard. Again, that's why I say at the open, it's 50-50. This was really a 50-50. Now, once we start seeing the market give us direction, and ideally, some of the best traders that you'll find out there, day traders, they don't touch the market until about 15 minutes after it's open. That's when they look on stuff to either jump, catch the momentum, the rejection, whatever it is. A lot of your really good traders, again, they know at the open you get all these orders, that were put in right before the pre-market close or aftermarket closed, and it's got to go through all of those orders. So that's why you get a lot of the, back and forth at the open, high volatility. So unless you're just in there just scalping real quick, just bounces off stuff, yeah, it's not worth playing the first 5 to 15 minutes. Just give it some time. Yeah, and whenever you give it time, what normally happens more times than not is you're going to find that the stock makes its way to a major level of buyers and sellers, and then you can use the POS, the precision order book strategy, to take advantage of it. So that's exactly what we had today. So let me see how many candles would this have been. So we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. My goodness, almost to the candle. So with that said, we were looking to buy the dip at 149 to 151. That's where we were ready to start buying. As you can see here, of course, the major level was here at 150, but buyers stepped in at 151, hence the reason why I encourage ones to be willing to buy it, like I said, from that 149 to 151, because they like to step in here. It dipped into just below 151 a little bit, I think. But anyway, so I had my orders ready to go. And oh God. Anyway, Nothing like a dry, itchy throat. But with that said, we were playing it back to we took our first profit, I want to say here at 155, and then final profit at 157. As a matter of fact, let me go ahead and show you that instead of just telling you here. I think I got it pulled up. Okay. All right. So this was the open today. Now, this was sent out. I sent this out when our firm was at 155. So plenty of time to get this notification and be ready to act on it. So 155, God, 155, be ready to buy the dip on a firm, 149 to 151. And as you can see in this picture here, yeah, that was what we were looking for. So, a lot of people, they might have, wanted to jump in there at 155, but we were waiting for the next major level. So with that said, take half off at 155. I said I will re-enter whenever it comes back to 149, 151. Take the other half off a firm at 157 if you are still holding. All right, so with that said, back to the chart. All right, so as you can see here, first profit target 155, got that. Took half off. The other half we were taking at 157. God, at the VWAP. And well, now again, you say, man, that was perfect. That worked out like literally. Somebody even messaged me and said that, man, we played it. We played it firm today about as good as you could. Well, it's now there's nothing that said that this couldn't have just got up on top of here and ran back to 159, 165 right here. But at the same time, it's about the probabilities. That's with the POS strategy, the precision order book strategy, we are looking for high probabilities. Okay. It's because what happens, unfortunately, is a lot of people, they get greedy. They're just trading blind. And what they end up doing is they end up giving, look what happens, comes all the way back down. And why did I say that I would re-enter when it came back to 149, 150? Because again, it never tested this liquidity. So if it rejected here, it was all but guaranteed to come back down to here. I've seen it just countless times. Yeah, it's at this point, it's like, yeah, foretelling the future. I've seen it so much. So with that said, came down here, 150. I sent out the alert to take some profit off between 152 and 153 or all of it. And then, actually I sent out to take all of it because I was just a little worried because we started having liquidity start to really build up between 150, 145 and 148. But with that said, I was confident taking some profit or jumping back in here at 158, sent that out for re-entry to 158. And then 152, I was out. Like I said, this was just, I was not about to get back a bunch of profit. Now, again, this could have very easily at this point ran all the way back up to the BWAP, but it's just one of those that I don't know. It's one of those that part of it is just unteachable. Part of this is just a sense. Now, granted, that sense can sometimes get you out a little bit too early, but it served me well. So with that said, that was a firm. We see that the rest of the day, it's, we had plenty of buyers between 150 or 149 and 148, plenty of buyers there to hold it up. And in fact, they ended up finally, which we had already shut it. We shut it down after the first hour and a half of trading. So somewhere in here, I shut it down and stopped sending out plays for the day because, hey, I mean, we had already killed it. So yeah, it's one of those. It's a beautiful thing about trading and being able to day trade. I mean, It's pretty awesome to be able to come into the market within, hour, 2 hours, made a nice paycheck and get on out of there. Go enjoy the rest of your day. Go find something to do. So yeah, ends up pushing all the way back up to VWAP. And of course gets us, because again, when we're below the VWAP, there's always sellers at the VWAP. When we're above the VWAP coming down to it, there's always going to be buyers there ready to pounce. So really, until this could prove that it could get on top of the VWAP, yeah, you're taking profit at the VWAP. So with that said, dumps all the way back down. All right, here, let me get on the $1 or the $1 increments. You get a little bit too much liquidity noise whenever you start going to the 50-cent increments. We primarily stick to the POS strategy. We stick to the 1 minute and the 5 minute on these big caps. So with that said, knocks it down to the VWAP. Where is it going to? Next major level of buyers, which yep, we're hanging out here at 150, and they're ready to buy the dip. Pushes. God, sorry guys. 153. They push it back up to 153. Comes right back down to them. Sellers are just pouncing all day long on this thing. So eventually ends up drifting all the way back down. But again, this is nice here. When you see all these 145, 146, 147, 148, all these buyers on these dollar increments, I mean, that's extremely promising for this being a great buy the dip area. So, I mean, if you wanted to buy the dip, this was swing trade it. This is where it was at. Yeah, that's where it was at. So finally, the whole market starts bouncing. All these buyers at 148 were able to hold. And what do we see happens? Pushes up to the VWAP, knocks it back down. Oh, let's see, $1.50-ish, somewhere in there. And the buyers come back. If I zoomed into the 50-cent increments, you'd see where these buyers came in. 50-cent increments do a little bit better when it comes to trying to find where there might be a bounce at. All right, there it is, right here. So if you're looking to buy the dip after the rejection of the VWAP, there it was. There it was. Or you could have simply waited for support candles on top of the VWAP. Once you got that, 1, 2, 3, you get you good two to three support candles on top of the VWAP. What's our POS strategy always tell us? Well, we're playing to the next major level of liquidity. And in this case, where was that at? 160. So we see it pushes right up to 160, pushes right into all those sellers, absorbs, gets knocked down, pushes back up into them again. And there was a lot of sellers there. So again, in this situation, this huge level of liquidity here. Why would you want to hold? Why? There's nothing right here. I mean, no, I mean, now, if you're just trading off of emotion or you're trading off of your RSI or whatever, then yeah, I could see your logic here. But when you know where orders, buyers and sellers are sitting, looking to fill a bunch of orders, and you know there's going to be movement as soon as it gets there, and you understand our strategy and how it works, you know that this is a take profit and see. Now, not that this couldn't have got absorbed. They could have absorbed all these sellers. Say it pops through. What do we always know with our strategy? It's going to pop through. It's going to come back and retest them. So it's going to give us the opportunity to get out for break even if we want to. If we're worried that it's going to just keep blasting up. But in this case, take profit and see, and ideally take profit and short. And sure enough, yep, it ends up dumping all the way back. Yeah, dumped all the way back to 150. So again, imagine you're the long-term investor. You started the day, you got in right at the open at 160. You, finished the day $10 down. Whereas someone who could day trade the market effectively, and especially in knowing where all the major major levels of buyers and sellers are, think of the money they could have made. Yeah. Instead of being down $10, someone who can successfully trade the order book, I mean, they could have, there was 10, 17, 27, 37. So there was almost $40. We're actually a little bit, 40 to maybe a little bit more. $40 worth of bounce between the open and then the close today. So bouncing back and forth. But yet the stock ends, $10 down on the day. So the ability to be able to day trade using the POS strategy, the order book, I mean, it can really increase the amount of money that you can get out of one stock. So with that said, we're going to shut it down there. Y'all probably had enough hearing me trying to cough up a lung here. Apologize about that once again, and appreciate you making it to the end of the video for those that did. And if you'd like some more education, feel free to check out our previous videos. Please, I mean, it's I don't ask for much with this. This is, just had somebody the other day who just couldn't believe that sharing the stuff that I do freely. So, if you appreciate it, please share it with somebody. Share it, one of your, somebody that that trades and that can benefit from it. Because it's unfortunately there's a there's a lot of people, a lot of traders, a lot of people that wanted to swing trade, day trade, making a little part-time income, that if they would have had this knowledge, the market wouldn't have destroyed them and they would no longer be here right now. So, because the reality of it is, the more people that know about this, the more powerful it becomes. For example, and give you another example of another indicator. Of course, this is the best first and primary leading indicator in the stock market, but let's use a lagging, say the 50 MA daily, which AFRM actually went down to yesterday. I was traveling for the past couple of days, so I missed it. I wasn't able to grab it, but AFRM went down to the 50 MA daily yesterday. Wonderful buy the dip opportunity. Now, one of those that's, again, a 50 MA daily being a lagging indicator that it is. It's one of those that, you can play off of stuff like that, but it's just risky business. It really is. Why would you want something lagging when you can play something? Because I don't have a screenshot, but if I could have screenshotted what the order book looked like yesterday at the 50 MA, I guarantee you that there was a ton of people ready to buy and sell right at that level. It wasn't because it was some little line on a chart that made it bounce up. It was because there was tons of buyers and sellers ready to go at that spot. So, that's the idea behind it. So with that said, a lot of guys could have stayed in the market if they would have just understood that, that there's something out there better that could have helped them. So with that said, I hope y'all enjoy the rest of your evening, and thank you for watching the video.